It's been a while. How's everybody doing? Let me know if you could hear me. I was having technical difficulties. The sound wasn't working, then the video wasn't working, and I think I fixed it. But let me know. Yeah, if you could let me know if you could hear me. So how is everybody doing in the market? It's um it's still it's still bullish, right? Um, my portfolio hasn't gone up much. Uh, I have Netflix, which is one of my better performing stocks. And that went down 10% one day because they didn't beat earnings. I think they didn't beat top and bottom line. Revenue was fell short and earnings fell short slightly. But I mean they grew a ton from last year. What's up, D Charles? Yeah, I mean, why was I away for 2 months? It was just how it is. Life is stressful. Life is boring. It's just it wasn't anything particular. It's not like well, I am studying for my enrolled agent exam. I don't think that's why I wasn't on, but I've been doing that a lot more. I'm not even sure why I'm taking this test, to tell you the truth. I just I do like taxes, and I want to learn more about taxes. The enrolled agent is an exam the IRS gives, and if you pass it, then you could put the acronym on your resume, but you can represent a client in a tax matter. You can legally represent a client. Like if like for instance, if you charge people to do the taxes, or you just have or a friend asks you and they have like they get a letter from the IRS or the franchise tax board, one of the state agencies, saying that they owe past due taxes. Having the enrolled agent certification, I could represent that person on their behalf. Um, so the CPA is similar in that respect too, where if you have a CPA exam, you could represent someone on a tax matter, but you don't have to have a CPA or an enrolled agent certification uh, to do someone's taxes. You just need a PTIN number, um, and it's free, a PTIN number, which I did get it. So if you did taxes for, say, a friend, on the bottom of the form, you would write that you did the taxes, you represented the client, and you write your PTIN number. Um, but I do want to learn how to do taxes. I can do it to a basic level. Where does PTIN number? I mean, I'm gonna have to take a huge pay cut to be like, it's like to get hired to do taxes. It's like $20 an hour because I don't have any experience. So I'm gonna take a huge pay cut to do that. But I do want to learn how to do it because I'd like to. I would like to at some point when I don't work, just do that or something on the side, like have a side gig, so I can do taxes for a few people. Um, I just want to. So this is the. So for an individual taxpayer, your CPA has to complete Form 1040, and it's all online now. So, but if you have a CPA, like if you pay somebody, um, then they have to. Right here, paid preparer use only. So you have to write your name and put your PTIN number. And like I said, you can do tax returns for people and you don't even have a CPA or anything. If you don't need it. I thought you needed a CPA to charge people to do taxes. You don't. You only need a CPA or an EA if you represent someone in a tax matter. So I was looking into buying a franchise, a tax franchise. I don't know. I'm trying to find something new, and it seems like the more things I look into, the more lost I become. Mike, what's up? But you don't want to hear about that. I could go on and on about taxes. I did pass this. It's 3 levels, the EA exam. There's 3 tests you have to pass: the individual test, the business test, and the other test. I don't know. What is the other test? I'm taking the business test next week, which they say is the hardest. What are the 3 A exams? So individual, I'm taking business next week, and then I have to take representation, practices, and procedures. That's the 3rd test. That's supposed to be the easiest of the 3. It's a pretty simple test. I mean, it's much easier than a CPA exam. But anyway, so how are you guys doing in the market? And I'm never happy. I'm always mad. It doesn't matter if I make a lot of money or lose a lot of money. I'm always mad. If I make a lot of money, I'm mad I didn't buy more, or I'm mad I didn't invest in like Bitcoin or whatever. And if I lose money, I'm mad I bought it. So yeah, Netflix is one of my better stocks. I'm up 182%. I bought it in you can see right here. I paid $388 for Netflix. You guys should have watched my channel. That was one like easy buy. I thought, why didn't I buy more? I don't know. So this is a good exercise to do. January 2022, I bought Netflix, and I wanted to buy it in like 2012, and I didn't, and then I kicked myself. That I didn't buy it then. Like I said, you're never gonna be happy, whatever you do. I think. Okay, on already. Okay, I'll just. And people always complain, like when I go through these exercises where I show you, like if you bought it here, you would have done this. If you bought it here, and people always like, I don't care about the past. Just tell me what's going to go up 10x in the future. But I mean, the way you can learn, no one really knows the future, of course, but the only way to really be able to somewhat predict the future is to understand the past. If you can understand the past, you're more likely to do better at predicting the future. So anyways, so in January 2022, so it hit almost 700 in right before I think that was okay, that's 9/2021. So September 2021 it hit 700. You know, and I've been watching it and I never got into it and I'm like, "Oh god, 700." And it's right after COVID, right? The COVID rush. And then it came down, it was down like 45%, and I picked it up at 388 in January 2022. So about 4 months after the peak, I was like, I thought it was a good entry point. And then within 3 months, I was down 50%, or maybe even less, like 2 months, I was down 50% right away. So of course, now I'm like kicking myself, oh, I should have bought more. But I was down a lot in all my other stocks. I don't have unlimited amount of funds. Hey, Ed, what's up? So I did not buy more. And then it ran up to, what was the peak? Wow, it got over 1,300. So then it ran up over 1,300. But, obviously, buying at 388, I'm pretty happy, right? So it's good to look back and try to understand, because in the moment, if someone did exactly what I did, they saw the peak, then they saw the pullback, and then they dumped. I mean, I dumped a lot of money into it, like 40,000, which is still a lot for me, into it at that time. If it was like a regular investor, they would be on Reddit, on Facebook. Should I sell? Should I sell? What should I do? A lot of them would have probably sold at some point, because they just can't handle it, because you're living it every single day, seeing it go down and down and down. And then a lot of people, if they did hold out, and then they probably would have sold on one of the pullbacks, because you can see it got up to my about 400 where I bought it at, and then there was a pullback down to probably 360. So a lot of people would have probably sold around here, because they just assume when a stock's going down, they just assume it's going to keep going down. And when it goes up, they just assume it's going to keep going up. So people generally sell when a stock goes down, and they buy when a stock goes up. They do exactly the opposite. And I'm a victim of this too. I bought Google at a peak, and it took me a year and a half to get back to my price point. Yeah, Kevin, what's up? Thank you. I appreciate that. And it kills me. I'm like, why don't I practice what I preach? But anyways, but when you pick a good company and you hold out, it doesn't matter. You could see this line here. Like, what is this, from 2002, 2000? So this 15-year line here, it looks like a blip. Like it's irrelevant where you bought it in this area. If you're still here, it's just so much of a difference. But if it was 2012 and we looked at this chart, it would be real bumpy, but you can't even tell on this chart. So that's what I'm saying. If you buy a good company and you hold out long enough, it doesn't matter whether you bought it here, over, this is a 15-year time horizon. You just have to hold. And you could hear this all the time. When Apple hit $1 trillion market cap, people are saying, you can't get rich anymore doing stocks because the stock market peaked. Apple's $1 trillion. Stocks are never going to hit these levels again. Now look at, there's some stocks closing in at $5 trillion, and a stock that wasn't even on the radar, Nvidia. So stocks are going to hit 10 trillion, 15 trillion. It's going to keep going up. We're at an age where I think it's proven that the world economy is growing. So that was my laggard, Netflix. I was up 240%. Now I'm up 180%. Apple is coming back again, but my best performing stock is Nubank, up 270%. The Brazilian fintech. I mean, I've just picked pretty safe stocks. Berkshire. I don't really have any risky plays. You know, in the past 15 or so years, I did do options. I bought stocks that I ended up selling. So you don't see it on my portfolio anymore because it's gone. The trade is gone. So in between, lots of things have happened, but the long term plays, um, I just pick good companies. I mean, I think they're good companies. And generally, if a company's a big company, it's probably a good company. I mean, usually if you have 50 billion in sales, you're probably a good company. And if you have 5 million in sales for a public company, you're probably not a good company. But of course, that's what everybody tries to do, is find that 10x, that 100x stock. But you'll be 70 years old saying the same thing, trying to find that. Where are you from? You have an Well, I'm from Staten Island, New York City, but I worked hard to get rid of my accent. So, now I'm in California, so now it's a hybrid. But when I lived in New York City, when I graduated college, I was I went to a bunch of, obviously, interviews, and I spoke to headhunters, and some of them would say you got to get rid of that accent because it was much stronger Staten Island accent. They say you come off unintelligent because when you have that really strong Staten Island accent. So I worked hard to get rid of my accent. So when in New York, when I talk to people in New York City, they say, "Where are you from? You don't sound like you're from around here." When I lived in New York, and then when I moved to California, people say, "You're from New York. You have a strong New York accent." So it's all relative, right? Um, didn't you have much larger exposure to the payment sector a while back, or am I mistaken? I'm not. What do you mean, the payments sector? When you say payments, you mean stock and PayPal, and like credit card processors? Um, I don't know what you mean by payment sector, um, but I've never owned a. I'm trying to think. I don't think I've owned a. Well, Nubank is like when you say payments, because Nubank is I guess a payments, because they do uh transactions like, but no, I don't think I can't. I don't think I had Lumen. I It's finally coming back because I bought it at 9.50, and then it went down to like $4, um and it's finally coming back. I think Lumen. I think it's a good opportunity. I see a lot of positive things in Lumen. It's a little risky though. So Lumen is I guess it's like AT&T. Um, is that yeah? So okay, so it's like a really small AT&T. Um, they're a telecommunications company. So if you have internet, phone, but they've been around a really long time. I think in 1930 they started. So they've been around longer, I think, than most of these companies. You don't see often a company based in Louisiana. That's not a commonplace. But anyway, so they have, 1930, so almost 100 years they've been around, but their technology is very outdated. They use older technology. So they had a massive base of customers, say in 1990, and they've been losing like 5% of their customer base every year. I mean, but they started out with like millions and millions of customers, tens of millions of customers. So even though they were losing market share, they still had billions and billions of revenue coming in the door. So they went from like They went down like over 90%. I mean, they probably hit $1 at one point. They so slow. Why so slow? Okay, here. So they've been around a long time. You can see back in the 80s, and the peak in 99 and in 2007, they hit $50. So they still have a lot of revenue, even though they lost probably 80% of their customers. They probably still have, I wish they would show it on this screen, but so slow. They still have 13 billion of revenue. I mean, it's quite a bit of revenue, right? I mean, it was 20 billion in 2021. But you don't like to see this decline, right? But still, when you go from 20 billion to 13 billion, you have to look at it against the market cap. And the market cap, I mean, sure, it went down 40%, which is bad, right? But the market cap went down 90%. So you're getting a great value. It's all relative, right? You can't look at revenue and say, okay, revenue's down, so the company's doing poorly. You have to look at it relative to what it's worth. Like, for instance, if there was a house that costs like 500K, and then and it was a really nice house, right? It was in good shape. It was move-in ready. And then the same exact house, and the roof blew off. Like, the roof was just in bad shape. So you need to put whatever 30K into getting a new roof. So you can't just look at the house before and after and saying, okay, the house looks like shit now, I'm not going to buy it. What if he's selling for 400K, the house? It's a good value, right? Because I'd rather save 100K and just put 30 into the roof. What if he's selling for 300K? It's an amazing deal, right? Because you know you could just add. Same thing with a stock. Just because they went from 20 billion. I'll show you what I mean. So in 2021, they went from 20 billion, and then in 2025, they're 13 billion. You can't just look at one number. You want to look at market cap, what they're selling for. Same thing with the house, what the house is selling for. So it was $14 in 2021, and it's come up now. But I mean, at one point you could have got it for $1. Let's even 40 cents. Imagine getting it for 40 cents. Now it's $8. So now market cap, so it's 8 billion right now, but at the low point it was 1 billion in 2024. And in 2021, it was double. So what's the price sales ratio? P, which is price market cap, over S, sales. So price sales is 0.8, which is a good price of sales on its own, but now it got down to, how come it didn't format it? Now it's 0.08. It's 10x better. It's a 10 times better value. Sure, the revenue went down 35%, which is bad, right? a decrease of 35%, 20 billion to 13 billion. But the market cap went down 94%. So that's how you have to look at it. You have to look at it on a valuation, not on just one number. But it's hard to do. I mean, obviously, if I'm so smart, why didn't I pick it up at? I was looking at it too for a while, and of course, it seems like it's so fast. Like if you're tracking these stocks, when was it? Okay, it was in 2024. If you're tracking these stocks, it seems like it doesn't last that long, but it did. I mean, it was trading under $1 for a few months. It wasn't like for a minute. You could have got into it, but it's just, it's, you see it at 20, and then it takes a year or two, it goes down to 10, and then it just keeps going down. Like it's just hard to know when to buy into it. Market cap is perceived value on absolute value. Sorry, market cap is the value. Is like a short-term indicator. At any one moment, I mean, a stock couldn't be priced correctly. It's possible, but most stocks are priced incorrectly. But over time, over many years, because obviously, if you look at like Apple, they're priced. I mean, companies grow into their value. The good companies, the Teslas, Apples, they grow into their value, and then they usually don't go up as fast. But lately, it's just been a crazy economy. So if a stock has 1,000 price to sales ratio, it's extremely overvalued. Usually, it grows into that. And if you bought Apple, if you bought the good companies, you would have made a ton of money if you held on to it, even though it was overvalued for so long. It did grow into its value, and the price is justified. And then garbage companies go down over time. But what was it? Would you say market cap is perceived value? I guess you could say. I mean, it is the real value. It is the value as of today. But you have to. Do you think it's a good value today? You might totally overpay for a stock, like we all did at times. Like I told you, Google, I picked a bad time to buy it. But if you hold long enough, you don't even notice this stuff. So it was in February 2022, right before the split. So at 146, I got it, which was an all-time high, and it was February 2022, so I got it right here. Okay, so it was 10% off its high. And it took a year and a half to get to back to where I bought it at. But now, I'm up 80%, so I'm okay. But yeah, but when you buy it, do you feel it's trading at a good value? Like I said, you might totally miss the boat. Like I think I did. I bought it at a bad time, but now it's a few years later, it's okay. And you might time something what you think is timing it really well, but the stock is just not a good company, and they never turn a profit. Can somebody give me a good example of a stock? Oh yeah, Kevin, thanks. Yeah, I'm really proud of some of those videos. I've gotten actually some job offers from people because I put that the video, I think is my best video, which I suggest people watch if they want to learn how about. It's connecting the financial statements. I think this is a really good video. I went for a job interview. The president of the company, he said, because I have it on my resume, a link to the video. And so a lot of people watch it if they look at my resume. And so the president of the company said that he told everybody to watch my video. He said he never saw um, the financial statements broken down so well. And I'm like, oh, I'm a shoo-in, but he didn't hire me. But it's nice to hear that. It's a little dry, but how did you get a job interview? I just applied on Indeed. That's I mean, no one's ever found me. No one's ever like saw the video and like said, "I want to offer you a job." You know, it wasn't like that. I just apply for jobs on Indeed, and the link to the video is in my resume. So if they look at the resume, you know, obviously some jobs, they get so many resumes they don't even look at half of them, I'm sure. But if they actually look at the resume, they just click on the link and it'll bring them to the video. Yeah. So how's what Oracle? That's a good one, right? There's just so many stocks. I'm telling you, everybody. If you haven't really grown your portfolio, I'm like a lot of people think they missed out. Like, oh, it's too late. How could I ever make money? But I've been hearing that my whole life, even back in like 2000 or like 2005. Like people are like, oh, it's past the point of making money. Now you can only make maybe 5% a year. The market can't go up that much because it already went up, but it's going to keep going up more so than ever. And I'm not just saying that. The main reason is because technology is not only technology is moving at a rapid pace. The main reason the market will go up so much in the future is because it's a lot different. It used to just be the U.S. controlled the market. We were like probably like half the market. If you summed up all the stocks in the world in like 1995, probably half of them were U.S. Now it's the world. The world is moving up pretty fast. So there's so much money coming from a lot of more countries than, which helps our economy. It helps all the the more money in the market, the better. That's just my theory on it. Like, the Oracle, it reminded me. Well, look how much it came up. Sheesh. Because the peak was in 2040. It almost hit $50 in the year 2000. It was just like Intel. Intel had but the difference is Oracle is doing well, Intel's not. What the hell? I wonder why that didn't work. Oh, how did job interview? I thought you wrote how did I get a job interview? I think it actually went well, but they didn't hire me. Or Intel, the peak was in 2000 for Intel, 74. It's never hit that again. And Oracle reminded me of that too. The peak was 50 in 2000, and by 2020, so 20 years later, it was back at that level. Where Intel, it was almost got back to, it hit 65 in 2020. So after 20 years, it looks a lot different now, but after 20 years, Intel and Oracle looked very similar. They peaked in 2000, and then they really struggled for 2 decades. And then by 2020, they both got pretty much back to where their peak was. The problem was Intel really hasn't done anything since. It looked like it was going to keep moving up, but it came down a lot to below 30. Then there was a big run up, and then what happened recently? It fell to below 20. So it's coming back again, but Oracle, look at Oracle. After that, it got back to 2020 levels. I mean 2000 levels, and it just really took off. So which horse did you bet on? Intel or Oracle? They're both good horses, right? At the time, but Oracle would have paid off really well. You would have lost probably, depending on when you bought it, you probably would have lost money on Intel. But who would have known that, right? Yeah, I have Pfizer. I sold my Intel. My only negative is Pfizer. It's down 30%. Oh no, Lumen is still down. Lumen, I was down. It's come back because I got it. I mean, there was a huge run up to, and I got it at 950. Probably a bad time to buy. And then I was down 60%, but it's coming back. Palantir is my biggest. If I would have just held on to my Palantir, I don't know if I would have retired, but it would have been pretty close. I don't want to go. I don't know how much I bought of Palantir, because in 2021, I went in on 5 stocks. Was it 2021? So yeah, I think it was 2021 or maybe 2020. I went in on 5 or 6 stocks, pretty heavy, and I'm scared to look how much I put into Palantir. I'm hoping I put just 10,000 to Palantir, but if I put the higher amount into Palantir, I might jump off a bridge. How much I screwed up on that one. But it doesn't matter if you have $10,000 in your portfolio, right? And your dream is to hit 100,000. Once you get to 100,000, you're not going to be like, okay, I'm done. I don't need to make any more money. You're like, okay, I want to get 200,000, and then eventually you get 2 million, and then so it's not like it always seems like if I hit this point, then I'll be set. If I just make $50,000, obviously now 50,000 is nothing at my job, I think I'll be set. I'll be happy. Once you get to 50, you realize after taxes, you don't even get that much money. Then you're like, okay, if I could just get to 80, I know if I make 80, I'll be happy, I'll be set. But it's never enough. Do you think Intel would spike if China follows through with the unification invasion of Taiwan? Yeah, I think there's a lot of things, and they have so much potential. There's so many things, but like they've been shedding market share, and they still haven't really gotten even close to like the high quality semiconductors. Mostly Nvidia, but also there's other semiconductor companies that make much better products. So they still can't compete at the level as some of the newer semiconductor companies. As you can see, they was at the peak. I thought they hit 100 billion until revenue. Okay, here. Okay, so that was the peak. So, come on, what the hell? So this goes back to 2012. So from 2000 to 2020 or 2019, they were bigger than anybody. They were the biggest. I mean, it was recent. I think it might have been up through like 2022, maybe they were the biggest semiconductor company in the world. And back in 2000 and 2001, 2002, the PC boom, they were bigger than everybody combined. They were by far the biggest. So you can see that they had a huge head start, but the quality is they're not even close. And you could see revenues down. It's starting to flatten out, and they're really they focus on which I think to their detriment. They're just they're spreading themselves too thin. They're doing both. They're foundry and they're not fabulous. They're fabless. So foundry largest. Okay, yeah, I'm getting the in my head. Okay, right. So fabless, right, is they're not NVIDIA's fabless. So fabless means they don't fabricate. Fab means fabrication. So they don't manufacture. So NVIDIA doesn't manufacture chips. I mean, they do some, but very little manufacturing. They outsource their manufacturing to Taiwan Semi, which does a majority of the manufacturing for other semiconductor companies. So their biggest client customers is NVIDIA. All the semiconductor companies are customers of Taiwan Semi because they do most of the manufacturing. So that's why NVIDIA is almost 5 trillion. What is Taiwan Semi? That's over $1 trillion, right? Is that over $1 trillion? Sheesh. Didn't realize they were. So 1.5 and 4.5. But Intel's doing both. So they're a foundry and fabless. Most companies aren't doing both. Is it working? Obviously, it's not. They're down a ton, but I think it could be a good opportunity to get in, but I'm not sure. So they're doing both. They manufacture chips for themselves and other companies, and they also design chips like NVIDIA. And it's hard to be a manufacturing company when you're based in the United States because it's just so expensive to manufacture. It's a lot easier if you're based in Taiwan because, as you know, the labor is much cheaper in Taiwan. The only good thing about Intel is that the government is really subsidizing a lot of these semiconductor companies. But they're also subsidizing Taiwan Semi. I mean, the government's giving Taiwan Semi, tens of billions of dollars just so they build their plant in Arizona. Because obviously, we want jobs and tax revenue here. Taiwan Semiconductor Manufacturing. It's Arizona, right? Is where they manufacture. Taiwan Semi is building a major campus in Phoenix. So the project presents the largest foreign direct investment in U.S. history. So they're investing $165 billion into our economy. I mean, we're footing a lot of the bill. How much is the government giving Taiwan Semi? Probably half of that we're going to give to them. maybe not half. I thought it was more. The U.S. is providing Taiwan Semi $6 billion in grants and $5 billion in loans, so 11 billion. It's a good investment. I mean, people, of course, people who are ignorant will say, "Oh God, what you're giving a Taiwanese company $11 billion? Why do you give more to the teachers, or why don't you stop defunding the police?" Because even though it sounds like a lot of money, they're bringing jobs to the U.S. and a lot of jobs. It's kind of like when Amazon is looking for a new place to build a manufacturing facility. So they look in different cities, and then some cities offer them a lot of money or a big tax break just for putting the factory in. Like some towns will give Amazon millions, tens of millions of dollars just to come there. Say, we'll give you a check for $10 million. We'll pay for your factory. Just come here, because they know when Amazon builds a factory, Amazon is maybe going to have 5,000 jobs in that factory. And then what happens? 5,000 people are now employed, 5,000 more than before they came. And that's a trickle down effect. Those 5,000 people will start spending money in the community. They obviously, food and things like that. And it also brings jobs. Some people may move to that town to work there. And that's how you build an economy. That's how you flourish and grow. Don't sleep on IPO of 2026 next year. Anduri. You haven't been following the market as closely, so let me know if there's something I'm missing, because I'm Anduri. Anduri did an IPO. Like, okay, so it's not set for 2026. It could be 2026 or 2027. $30 billion company. It's a pretty big private company. Did I spell it wrong? And Anduril? Anduril? Okay, it's a defense company. Autonomous systems. That's a pretty young company. 2017. To have $1 billion in revenue, and you only started business 8 years ago. That's pretty good. And they're a private company, so it is harder to grow and scale when you're private. You don't have as much access to funding. That's why companies go public, to access the capital markets, sell stock, and sell different types of, not just common stock, the preferred stock, and also it's easy to get debt. And Dural. Yeah, that looks really interesting. Is Peter Thiel? Lucky met, who had recently persuaded to leave Palantir and join Founders Fund by its leader, Peter Thiel. Looks pretty good. Yeah, I got to keep an eye out for that. Upcoming IPOs. But yeah, Apple has been doing really well. Remember when Buffett sold off Apple? And it was down a lot, and everybody's saying what a genius he is. He sold it, saved a lot of money. So it's coming right back. Is it trading at its all-time high again? Yeah, it's beat its all-time high. So it could have been a good time to buy. You could have made a 30% profit on Apple if you bought in April. Look how low it was. what other IPOs? Yeah, I don't know. I guess that's why they're private companies. They're more unknown. Smart Logistics, Phoenix Education, Palm Doctor. But if you threw a dart and bought if you threw, like, if every year you had, like, all the IPOs listed, like maybe you had a box with like a piece of paper for each company that went IPO. Say there's a couple, whatever, 200-300 companies in that box, and you pulled out randomly, you would go bankrupt. Most companies do not succeed. A majority of companies end up going out of business or going away. For all the the Apples out there, there's like 1,000 companies that went under for each one of those. That's why most people suggest just buying. Even Buffett says just buy an ETF, buy S&P 500. Because even if I told you in like 95 or 2000, if I told you about Apple, it was a pretty popular company back then, even in the 90s. But if I told you, you probably wouldn't have sat on it for 30 years. You probably would have took in your profit, say after you're up 100% after 5 years, you probably would have sold it, or you're 500%. What's earnings? Yeah, what happened with Netflix? Netflix. The earnings were much better than last year, but they missed targets. They missed a target, but they've been crushing it. Each quarter they just been killing it. Like everything's been going up. So I mean, the stock went up. The stock went up like what, 400%, 500% from 2021, maybe more. They have so many users, and it's really, that's the most important thing. How many people subscribe to Netflix? That's the number one indicator. Subscriptions. And I bet you their stats. So there's no okay, this just looks like the minutes from the okay. So revenue grew 17% in the quarter. So that's, I mean, the revenue's been growing a lot lately. So that's still a pretty big number, 17% at these levels. Anytime you break double digits, but the problem is the forecast was 18% or whatever it was. The forecast is a little higher, so that's why it came down. Margin 28%, which is down. So they're getting squeezed a little. Expenses are going up. That's due to an expense related to ongoing dispute with Brazilian tax authorities. So it looks like the tax bill was higher in Brazil, or some type of tax situation. Absent this expense, we would have exceeded So they would have, if it wasn't for this Brazilian tax situation, they would have went up. Their margins would have improved. But people don't look at this type of detail. They just look at the high level. Okay, revenue is in line with forecast. So that's a good thing, right? It's in line. You want to beat it, but at least it didn't fall below. But margins are down. Margins are down 3%. It was 31, now it's 28. But it's just this one-off Brazilian tax thing, which is probably never going to happen again. Engagement remains healthy. So that's the main thing you want to look at is users and how long the users watch. We hit our highest quarterly review share ever in the US and UK, which has grown 15% and 22%. So they're really, I do both strategies. They're coming out with hit after hit. They're really, like, the viewership is off the charts. They're always coming out with these really interesting shows, not just like the Happy Gilmore type movies, which a lot of people watch, but also these like nuanced things. Like I saw this thing on Netflix where it was a woman who killed her neighbor. I mean, it must have took like, less than $1 million to produce, because there was nobody in it. There was no actors. It was just a body cam footage of the cops over a year. It was called The Perfect Neighbor, and it was about this woman in the neighborhood who couldn't stand the kids running around and running on her lawn and killing her flowers. And it was just body cam footage. So they didn't pay anybody. They just got the footage and edited it. And like stuff like this, like they're coming out with all these really interesting shows that are getting people to watch. And obviously the big things like the Canelo Crawford boxing match, and they have pretty significant things on there, like Kill Tony, like those types of things that a lot of people watch already. But they're just killing it. Look at revenue. I mean, it's up. It went from 9.8 billion to 11.5 billion. So revenue's up a good amount too. 17% is a lot when you're at these numbers. The growth, they're growing more. Last year, their revenue only went up 15% when you compare it to 2023. Now it's up from that point. It was 15% growth. Now it's 17%. Income is also up. It went from 2.9 billion to 3.2 billion. But margins are down, as you know. It went from 30% to 28%. I mean, last quarter was 34%. Free cash flow is up, its highest ever, 2.66 billion. So this is a good time to buy at these pullbacks. You're getting a 10% discount. But I want to see users. Netflix share of TV time. So if you look at the total time spent in the United States, if you summed up every minute spent watching TV of all the people, 350 billion people in the United States, all that time spent on watching TV, 8.6% of the time in front of the TV is spent watching Netflix. 8.6%. That's more than anything else, because there's no TV show that people watch 9% of the time. And all of the other streaming apps are smaller than Netflix. You have linear TV, but that's not one channel. That's like 1,000 channels. Like how much time is spent on HBO? Probably like, I don't know, 2-3%. So 9% of all viewership is this company. And that's up from 7.5%. In UK is even more. It's over 9%. So over 9% of the time. So if you walked into 10 homes in the UK, you're likely to find 1 out of those 10 homes people watching Netflix. That's how popular it is, and it's growing. So I want to see how many subscriptions they have. So here's their regular income statement. So that another, let's go through 11.5 billion just for the quarter. That's a new record for them in one quarter. I don't know where subscriptions. Does anybody know how many? Yeah, I bought Netflix in 2022. I'm up like 200%. It was my best performing stock, but it's come down, as you know. So I'm up 180%. I put a lot into it. I put like 40,000 into it, and my value is at 129,000. So how many? It must. I want to know how many monthly average users. It has to be in this report somewhere, right? Maybe it's not in this report. I wish I bought more. I mean, obviously, I wish I bought more because it did come down a lot. The thing is, these streaming apps, they touch the world. I mean, even like terrestrial shows like NBC, Fox, they don't really reach outside the U.S. Maybe they reach certain countries, but most of them don't reach outside the U.S. And it's harder to access outside the U.S. They reach every country pretty easily. So they have the world, which is so they can grow a lot more having access to the entire world. So they're over 300 million. Like they're raising they raised it quite a bit. Their the monthly service, which I'm happy to pay. I think it's $18. But I remember when it was like $11, $12. So they raised it like 50%. They offer the free service, and the free service has commercials, so they make money in commercials. But you can see it's grown a ton. I mean, even 2023, it was 260 million. It grew 20% into 2024. So it doubled. It doubled since 2019, and the cost of the service more like doubled or more than doubled since 2019. So, but it's pretty much only gone up. So it wasn't that big. It was mainly a U.S. service for a long time. Like probably 90% of its customers were in the U.S., but now it's really reaching all over. So that's subscribers. That's 2024. Is it still 300? 301 million as of August 2025. Why does it say 2024 on here then? 301.6 million. To 80 million in US. So US is only 20%. They don't make nearly as much money outside the US. Like 20% of their customers are in the US, but that's 50% of their revenue. Because the US spends a lot more money and per customer, probably double. So you can see revenue in the US is 81 billion. So you can see a lot less users, but that's a bulk of their revenue. Because they can't charge as much in like Indonesia for their service, because nobody can afford it if they did. But I remember when it was coming down, I mean, I said that about a lot of companies, a lot of stocks when they were regressing. Oh, this is a buy, this is a buy. So I mean, how did you know this was the one? But I bought it, so obviously I had faith in it. I don't think I bought it at a great time, a decent time. I bought it at, but like right after I bought it, it came down quite a bit. Because even if you got it, I mean, you could have in 2022, you could have like paid 2015 levels or maybe 2016 levels. But that's how markets go. They you can't really tell, uh, but like they're all pullbacks. And then because I mean, it makes logical sense, and you could even look at this on your broker website, but you can see how many people have a buy order. Like lots of people, there's probably millions of people that have buy orders on Netflix on every stock. So you might have right now, it's say it's 1100. So people have options and stocks. So you might have like once it hits 1,000 Netflix, because people have these orders set already, so it's automatic. They don't have to go in and buy the stock when it hits 1,000. It's set up. So once it hits 1,000, 30 million shares will get purchased, for example. And then once it hits 900, 60 million shares will automatically get purchased. And once 100 million shares to get purchased. But the same thing on the other side, you have sell orders. So it would be the opposite for sell orders. Like no one's going to sell it at 1,000. It would have to. So once it hits 1,200, you might have like 30 million shares will get sold. So automatically people would sell their shares once it hits 1,200 because they want to lock in the gains. And once it hits 1,300, 60 million shares get sold. Because people like some people may have bought 1,000 and they say, okay, once I hit a 30% gain, I'm going to sell out of the stock. So that's how it moves. You have all these orders placed. So once it hits a certain level, you might have had this 700 level. I think it was around 700 or 660. Then you have a lot of selling activity. And then usually people sell if they see a big fund selling. Like, so if they see like, you know, I don't know, you could pick a random ETF, AXA ETF. If they sell off like 10 million shares of Netflix and they issue a press report, oh, we're selling Netflix due to these reasons, then this copycats. People think, oh my God, if this company's selling, this big fund is selling, that must mean the stock's going to go down. And then there's a big sell-off. And then once it hits a certain point, then the buy orders come in and it runs it up. And then this really ran up. If you would have waited for this next run, you missed out on it was what, 300 to 1,200? So it's pretty big run up in in like 2 years. And there's going to be a pullback. I mean, obviously, it usually doesn't get back to like new lows. Like, it's never going to get back to where it was, but it might get back to like 700, and then there'll be another run up to like 2,000. Just rinse and repeat. Yeah, Beyond Meat. Yeah, that's a crazy story, right? Still kicking myself for not having bought Broadcom. I know it kills me too. So many things, and you can't ignore it. People say, "Oh, don't worry, just ignore it." There's plenty of opportunities. $50. I mean, $50. That was a long time ago. Well, not that long ago. I mean, it wasn't like in 2021, 2022. But would you have held on? Like, if you bought at a 50, do you think you would have held on? Like, say it went from 50 to 250. Obviously, you'd be really happy. But then it goes from 250 down to 150. So you're up 400%, and now you're up 200%. So you think you would have held on? That's the thing I try to look at. I try to like say to myself, well, sure, I could have bought it then, but I probably wouldn't have held it for 6 years. I probably would have sold it, because there might have been a time you needed money for, like, say you wanted to buy a house or whatever. So you might have sold it for something else. You don't sell stocks? Well, that's good. I try not to sell stocks. I usually don't, but I've not many times. Just Palantir is the only one that sticks out that kills me. But a lot of stocks I sold that went down, I saved money, like Intel. But even if you sell a stock, like say you have 10,000 in stock and you sold it. Say you bought it for 10,000, you sold it for 10,000. Say after a year, and then so say you sold it in 2021 for 10,000, and it would have doubled in 2024. It would have been 20,000. But what if you sold it for 10,000 and the stock you bought is 30,000? So that would make me feel good. Go, okay, I didn't double my money. I could have doubled my money, but I sold it and got something better. But what if you sold it and you bought something that went up a little bit? Then you kick yourself. So like I said, you're never going to be happy. Whether you make money or lose money, you always got to focus on the what if. Okay, well, that was a fun stream. I think I'll try to do more. Maybe I'll talk more about taxes, my new hobby. Yeah, thanks for joining. And I'm probably gonna do a stream with Victor next week. So I'll probably see you next week. Okay, talk to you later.